bull market from a retail perspective has not begun. So we haven't seen that yet. I know people thinking, oh, the bull market's gone and we're back into a bear market already. Like, we haven't had a bull market. The price movement has been from institutional buy-in, from the ETFs, from companies putting Bitcoin on the balance sheet, from old Bitcoiners buying more. We've got 10 years of history and 10 years of data, and we are Bitcoin only for that data as well. Yeah, I was wrong with expecting 100K being that price point. That was the mental barrier for the general public and the retail, and I expected them to start moving in. Doesn't matter which other coin you can throw out there, they all have some general central point of failure. They all have that central point of failure that Bitcoin doesn't. So it's just no common sense. There's no logic around why you would put anything but Bitcoin in that strategic reserve.
Really cool to have you. It's a pleasure. For the people that don't know, I mean, you have been in the industry so long, like 11 years. It's kind of impressive, as we talked with the Bitcoin only focus of the company also. But a few people that don't know you, give us an overview of what you do for Bitcoin.
Yeah, sure. So we're a CoinCorner. We're a Bitcoin exchange. Have been heavily focused on Bitcoin for the last 11 years now, coming up to 11 years. We're based here in the Isle of Man, which is, for people that may not know, a small island just off the coast of the UK. We kind of sit as one of the British Isles as such. So we're British, very much so, but kind of have our own country and our own jurisdiction, our own regulatory body. We're smallish team, coming to about 40 people now, mostly here in the Isle of Man. We have a office in the UK with a few staff. We also have an office in Dubai with a few staff as well. And just as we're slowly growing out, as Bitcoin starts to become obviously more popular, as everybody's starting to see now, we will start to target more specifically, I think, jurisdictions, as opposed to try and grab the whole world all at once. We kind of take it a little bit more slow and steady.
I like that approach. Really cool. And you mentioned a report that you did. Is this something that you do on a regular basis and gather data from the industry?
Yes. So we've just released this week a Bitcoin on the balance sheet report. I'll come back to that in a second. But yeah, this is kind of one of our first real data reports, should we say. We've done some in the past around Lightning and a couple of other ones, but nothing using our actual data to help show the industry and the public how and what people's behaviors are when using Bitcoin. So we did this one as an initial one because obviously Bitcoin on the balance sheet right now is quite a hot topic. But what we see in the industry is public companies that are buying Bitcoin because it's public. It becomes publicly accessible data. So we see MicroStrategy, Tesla, etc., where they bought Bitcoin, and that's the ones we know. I think it's about 83 companies, I think it was, I saw a couple of days ago, that were public companies known to hold Bitcoin. However, private companies, unless the private companies are shouting about it themselves, nobody will ever know they hold Bitcoin. So what we've tried to do is, obviously, we have a lot of private companies that hold and transact with Bitcoin with us. And we wanted to kind of share that, but we've tried to obviously, it's completely anonymized. It's just the data and the averaged numbers across the board in some respect to make a sample batch of data to help keep everything obfuscated from one side, but give the public a general overview and a decent overview to have almost a comparable alongside the public companies. So it's good to see the sort of ratios, I guess, in some respect, and how many are buying it. We did a sample of 100 of our business customers, and then 100 that they've been buying for, some of them for 10 years now, I believe, where they've been, we've got that data now for 10 years, which I know a lot of other people don't get. But it's good to see that there's a lot of them there that are buying consistently for the last 10 years, for example. However, they don't tell people about it. They don't shout about it. And we're not going to obviously expose them and say anything in that respect. But it's good to know, I think, for the public that there are companies behind the scenes buying Bitcoin. Lots of different scales as well. Not the MicroStrategy billions every month or so. There's a lot that are much, much smaller where they may be, £20, £50, £100 a time. They are a lot smaller, but consistent. So yeah, hopefully it's received well by the public and it's useful information. And we're going to then hopefully continue throughout this year to release more of these sort of research reports that are based off what is now 10 years worth of CoinCorner data.
That's super interesting, and it's also, I had just last week in my studio from a local exchange here in Austria, someone talking about the private sector, and he's saying like most of the private, and he's only focused on the business side of things, so only catering to businesses that want to buy Bitcoin with the balance sheet, and he's like, most don't want to tell anyone, like most are just like, hey, I want to buy Bitcoin, but I don't want to find it in the newspaper.
Yeah.
So that's the approach from a lot of businesses. And so my thinking was like, there's, for every publicly traded company that comes new on the board and adds to the list of like 80 or 90 companies that are now publicly traded and have a Bitcoin balance sheet, there are probably like hundreds of smaller private companies, maybe even like more than that are stacking, but nobody knows. And you might even use the products. You might even know the companies, and they're stacking Bitcoin. The CFO might be a Bitcoiner, but you just don't know about it because not every Bitcoiner wants to be public. Like I met a lot of plebs and OGs that have been in Bitcoin for 10 years and they know really great stories, and I met them at conferences or meetups, and I'm like, hey, you have an amazing story, but they don't want to share it anywhere else except of meetups. And then it's like, if he already comes to a meetup, there might be like hundreds of guys that never come to meetup, but they are in Bitcoin since a long time and they're stacking. So it's always interesting to see what's public and what the majority is that just is not public, but still stacks on a daily basis.
Yeah, it's exactly the reason why we obviously we'd never want to expose the people from many years ago that don't want to share their stories publicly. But it's great to see the high level detail of numbers, effectively the stats, to see that there are plenty of other people out there stacking. It just they don't want to shout about it, which is fair enough. And you are completely right as well with the companies that are stacking. You will, if you live in the UK, you will have likely walked into some of them shops, used their products on sometimes potentially regular basis without realizing. But some of these companies are buying Bitcoin or have done from many years ago. So yeah, it's quite surprising, but it's good to see. Hopefully, this data that they can see some of the categories. For example, we've got retail high street shops. You've got nursing homes. You've got I think there's even charities in there. There's quite a few charities, I believe. There's your local cafe down the street, your pub down the street. There's such a range of businesses. There's a building company. Everything you can think of. The range is so vast. It's not a particular category of businesses that are buying. I think, as you touched on before, Robin, you mentioned that it could be a CFO at a company that's a Bitcoiner, and that's the reason why that company has it. But it could be a CFO of a large nursing home chain, for example, and that is why they are buying Bitcoin. It's irrelevant of what the business is as such. It's the kind of the people and the decision makers in the business that are driving the adoption of Bitcoin.
Why do you think they're quiet about it? There are companies that are very open about it. They make marketing for it as they've seen that it doesn't shock the existing customers if they are saying they're Bitcoin, putting on a balance sheet, and it maybe attracts some new customers that want to buy at a shop that has Bitcoin on the balance sheet.
I think there's been it's probably quite a range over the years. So if we look back to, we had a customer, I won't name the merchant, the business, but they were selling e-bikes and they were accepting Bitcoin with us, but this was back in 2021 maybe. And it was just around the time, I think Tesla had accepted Bitcoin payments and then they pulled it for environmental issues. So this company that were about to launch accepting Bitcoin, it was only a couple of days before they were planning to launch. The Tesla news came out, the environmental impact, and they decided to stop and scrap it off because they were worried about what their customer base, being an electronic bike sort of company and good for the environment company, They were worried what their customer base might think when they start accepting Bitcoin. So some of them, the ones that are especially accepting Bitcoin, a lot of them do want the PR from it. They want the attention, and that's a great thing for them. But the ones generally that are buying Bitcoin in the background, probably 95% of them don't want to tell people, and they're happy to just sit in the background and buy Bitcoin, because it doesn't really necessarily impact directly the PR and the attention that they would get, and the customer base that they may attract from that. I guess they're maybe not seeing that as a big enough uptick, as opposed to maybe the privacy that they're happy to keep. Maybe they don't think about the marketing angle and the PR side of things that they could introduce with this. I think it is, unfortunately, there's no one answer. There's a wide range of things where people don't want to tell people because of all the above reasons I've mentioned there, the environmental impacts, the banks. We've even had it in the past where they almost don't want to flag it and highlight it because their banking relationships may be squeezed. We have had that in the past, and the UK is no exception to the rest of the world of what we've seen in terms of banking restrictions and banks closing accounts down for every reason possible. Obviously, CoinCorner being a Bitcoin exchange, we've struggled with banking over the years. My personal accounts, I've struggled with the years because of my association with Bitcoin. It's not easy. So businesses, when they look to buy Bitcoin, of course, the bank will see the transactions going through. But if they make a song and dance about that publicly, then that bank may start to ask more questions and begin to. We have had them close accounts in the past. So yeah, there's so many different reasons. Everybody's different. It's hard to pinpoint a single one. That's the biggest one, I would say, biggest reason.
That's super interesting. And that report that you are putting together, you're basically collecting all the data that you have through the CoinCorner platform, and then you're basically trying to see the buying behaviors and the behaviors of the people. What are you seeing? Is that a more short-term focus, or also more on the long-term of like bear markets, bull markets?
So I've got the report in front of me here. So let me just flick through and tell you in terms of, there's a couple of points on it that might be useful from a average transaction. So obviously 10 years worth of data in some respects. Some of the companies obviously are newer than 10 years. So they maybe have signed up and registered in the last year or two. But the average transactions that the business has made over the lifetime, which could be anywhere from pretty much 1 year to 10 years. The average transactions was 97. So a very high level average over a 10-year period. It looks like one a month in terms of a DCA in that respect. So it's roughly about one a month from each business's transactions. So I think that in itself has showed slow and steady purchases of Bitcoin over the years. There's another, I'm flicking on this because I know there is some good stats to sort of tie in with that. The other one, which I was quite impressed with, was the 60% of the businesses from the sample had never sold Bitcoin. So they've only ever bought Bitcoin, which is obviously from a long-term perspective, slow and steady long-term, and not selling. So yeah, there's definitely a good portion of the businesses that are just buying slow and steady over the long term. There's probably a very good portion, hard not to say too much, but there's a good portion that are old businesses that accumulated Bitcoin from many years ago, from even like the 2014, 15, 16 years. And they accumulated quite a lot of Bitcoin. And then over the last couple of years, as the price has gone up, they've just been selling small amounts as time's gone by. Sometimes, so you'll have seen with Peter McCormack and his Rel Bedford and the approach he took. He called his conference cheat code in the sense of the mentality of buying Bitcoin and putting it on your balance sheet for a business is a cheat code to running a business, because theoretically the Bitcoin value will continue to go up, which means your balance sheet of your business continues to increase, or even can potentially stay static for unlimited years in the theory. So what we've definitely seen is some of the businesses that had bought Bitcoin years ago had been effectively slowly over time, selling Bitcoin along the way over the years, effectively to bump up their balance sheet and allow them to continue to maintain the business in years where they've had a poor year. And it kind of pulls them out and allows them to continue operating without the need for any debt or anything along them lines. CoinCorner is probably one of the best examples in some respect of that being Bitcoin, or the Bitcoin industry. Obviously, we have 4-year cycles. So we have a 2 years of bull, a 2 year of bear. And during the 2 year of bear, you'll see in the industry, in the crypto industry especially, you will see the likes of Coinbase, Binance, etc. This time, was it 2 years ago? They were just laying off so many people, scaling back, volumes dropping because there's just no customers there anymore because the market's back into the bear market. And they have to scale back. They have to go and take lots of external funding, whether that's from venture capital side or wherever they're getting the debt side from. Whereas ourselves at CoinCorner, we've been fortunate where we've been able to accumulate the Bitcoin in the earlier stages. And then during the bear markets, we're able to kind of bunker down and allow us to maintain through the bear markets. And if required, we can sell some Bitcoin to maintain and sustain the business of where we are, allowing us to keep and never have to lay off staff, keep the staff numbers as we are, grow slow and steady, and then be prepared for the bull market and kind of hit the ground running with the team that we have, as opposed to trying to panic hire lots of people when the bull market comes and then lay off when the bear market comes. So it's allowed us to be a bit more, our revenue line, should we say, and kind of everything's been a bit more slow and steady and flatline in some respect, not flatline, but more consistent. It's probably a better way to word that over the years, as opposed to what you will see with Binance and Coinbase, etc. Is very much a roller coaster alongside the hype cycles. So having Bitcoin on the balance sheet has definitely been beneficial for CoinCorner. And as I mentioned there, some of the other merchants within the sample, very similar behavior where they've been selling during their bad years of business.
That's super interesting. It's also fascinating, this bull and bear cycle with businesses, because it is kind of a weird sign for the outside world also when you hear in the bear market, or like those many layoffs in that company, those many layoffs in that company. It's like, okay, is that industry really good? And I think if we get more to a state where companies in Bitcoin, and hopefully we make the distinction between Bitcoin and crypto more and more, because it's still that the general population, I feel like, has crypto within Bitcoin, and it's the same category. So we have to make the distinction in between there. But people see that. Is that an industry where there's a lot of layoffs and a lot of hype and those cycles are huge? Or is it where there are businesses growing that are slow and steady? So I think what you're doing with CoinCorner is really cool, because it shows a slow and steady growth where you can capture actually the bull market, but don't overdo it in the bull market, and then don't underdo it in the bear market. And I think that's the Bitcoiner way. And the other thing is more the, let's call it the altcoin way.
Yeah. It is exactly that, and it kind of ties into. There's another point that we've, or some of the data we've noticed. It's not been released yet because it's more of the retail audience data that we're going to be releasing in the coming weeks. But that one, very similar to what you're saying there in terms of our customer base is that slow and steady customer base. So our customer base, we've realized, is the older generation, should we say? When I say older generation, I'm talking sort of millennials onwards, millennials, Gen X, boomers. Whereas when we've looked at the crypto audience, should we say, which is like your Coinbase, your Binance, etc., that crypto audience is Gen Z and slowly bleeding into millennials. But the majority of their customer base is Gen Z and millennials, as opposed to ours being much older. And I think that's where the differences during the bear markets, the Gen Zs, etc., they've tried to get rich quick, I guess, on crypto. They've got burnt or got bored, and the markets come down, so they disappear and they forget, and they're distracted and go off with something else. Whereas the customer base we have continue through the bear markets, just DCAing over the time. So it becomes the slow and steady customer base, which allows us to maintain that level of consistency throughout the years. So it's definitely a difference between Bitcoin and crypto, is an age gap quite heavily. And I think with age comes risk, maybe. So the younger you are, the higher risks you'll take, as opposed to as you get older, you begin to take lower risks. I think that's just a natural human behavior. And that's exactly what I think we're seeing with that, where the older generation are happy to buy Bitcoin slow and steady because it's less risky than crypto. So it's a good differentiation. And I'm quite looking forward to getting that sort of data out so you can show the differentiation between a Bitcoin company and a crypto company.
It's also the age is quite interesting because I'm a rare Bitcoin. I'm 26. It feels like so when I look at my own channel statistics, and I have around like 100 to 150k people watching in like a 1 month or 3 month period. So it's not the biggest pool of people, but it's somewhat representative of Bitcoiners, and under my age, there's almost nobody. So like there's like 1% of my viewers are younger than me. So like 99% of my viewers are older than me. There's even like 8% that are above 65 years old, which shocked me actually that there are basically almost the generation between my dad and my granddad is kind of that one. That's super interesting to see. And I think the average age is somewhere between like 45 years old, 43 years old, when I last checked. So it honestly, when I came into the Bitcoin world, it shocked me what the difference between crypto overall and Bitcoin is. And I think younger people are more skewed towards, oh, like let's gamble in some altcoin, just because they might not have a bigger responsibility of a family or company like that. What's your how do you see the age difference? Because you probably have way more retail data than I have just from YouTube.
It almost, I think, exactly what the age you've said there. So I think around 40 to 42 probably is about our average. So it is exactly what you're probably seeing. The Gen Z generation, so that's like 18. People kind of bracket them slightly different sometimes, but 18 to 25 sort of region, let's say. That is a tiny portion of our audience. It's maybe, I can't remember the exact number, but it's maybe about 3 or 4%, as opposed to millennials being the biggest, which is up towards 40. And Gen X then being second biggest, which takes us into 50s. But still boomers being the 50s at 55 plus, etc. The boomers age actually is still a lot bigger than our Gen Z. So I think boomers sits probably around 15% maybe, as opposed to the Gen Z a couple of percentage. It's quite the difference, which this is where we're trying to dig in at the minute and find research in crypto. All of the crypto surveys we've found, it's massively crypto is Gen Z. And the Coinbase data and the Binance data that we were able to try and publicly find. Again, it's difficult because they're not really sort of disclosing much of that. But the bits that they do is always focused around Gen Z being these their customer bases, which is high risk takers, gamblers, which is crypto. And I think that's the differentiator between Bitcoin and crypto for me going forwards. It's just highlighting that Bitcoin is an investment purpose, and a slow and steady long-term investment, as opposed to crypto, Coinbase, Binance, etc. are your casinos. There you want to go and gamble, get rich quick. And they are two completely different business models with two completely different customer bases, quite honestly.
Yeah, I saw some. I'm currently searching it. There is there came something out of showing what the future shift in wealth is of like the boomers and the older generations are slowly going into retirement and slowly getting to the age where the wealth actually shifts to millennials and Gen Xers. So that shift is basically happening within the next like 10, 20 years. The number, I think, if I remember correctly, was like 100 trillion that comes 2 generations down, which is fascinating to see. It comes now to the generations where Bitcoin is more and more present and where Bitcoin is actually the more dominant form, which I think is super interesting to see, because it's the generations that control the wealth that kind of controls where the marketers are going. It's sad to see that we don't have more in the Gen Zs, because I'm on the border, like I'm actually a Gen Zer. But it's actually for the next 10, 20 years, not that important. It's more the millennials and Gen X's and whatever comes above them, I forgot, that are really controlling where the wealth is going. And I think that's an interesting indicator of exactly to that cohort of people where Bitcoin is getting more and more dominant. There's the trillions incoming.
Yeah, it is exactly that, I think. And the millennials and the Gen Xers are Bitcoin only as the majority, which is exactly maybe what we, in some regard, maybe would expect. But yeah, it's definitely interesting to start seeing this data now. It's kind of frustrating that we don't see more companies sharing more of that data as well, and sort of it helps with, it's like industry research, and you see the surveys. But the surveys are great in some respects, where you get it's kind of an overview and average of some sort of feedback and initial data. But the problem with the surveys sometimes is obviously people can just make things up and lie. Whereas hopefully data doesn't lie, and data is accurate and correct. So we can, with the data, obviously we can then make use of that for research purposes. And it's great to then see and understand how the industry is evolving, how we can then start to figure out how do we help everything from like regulations and how you're helping differentiate Bitcoin and crypto. Like we can take these arguments to regulators and say, look, maybe they should be regulating the two separate, which is ironically one of the things that Gary Gensler in the US was trying to do, even though he became quite the enemy of the industry for a period of time. He was still trying to differentiate Bitcoin and crypto, which I saw as a positive. That was, in my head, that was a positive. I appreciate the administration at the time, and Gary Gensler squeezed a lot of the companies over there. But again, look at the companies they squeezed. They were crypto. They weren't necessarily Bitcoin. There was no Bitcoin only company in that list of companies they were targeting, because Gary did separate Bitcoin and crypto, and he saw Bitcoin as the commodity and more of the crypto being a security. So hopefully with this data, we can start to help, I guess, educate regulators, educate people, educate the general public, media, and help make use of that in hopefully positive ways for Bitcoin and to show Bitcoin's adoption.
How do you look at someone that is not from America at the Strategic Bitcoin Reserve, as they are also doing a lot of the differentiation between Bitcoin and crypto more and more? Even Trump says now like Bitcoin and crypto, which I hope he gets more and more in that direction.
Yeah. I mean, it's great, to be honest. It's something we've been saying for many years, and people always say, yeah, but what about this coin and this coin and this coin? And it's like, I've had the same argument for 10 years with people, and it feels like it never seems to change, but I'm hoping more so now we might start to see a change now. US government, people will take that with more credibility. And them differentiating that is absolutely great news. I think that's one of the biggest things that people are kind of missing in some respects for the Bitcoin Strategic Reserve. It's great that they're looking to do a strategic reserve, and they're going to be buying Bitcoin in some capacity, or so they say. But the big thing for me was that differentiation between Bitcoin and crypto. And I we on the podcast we do internally here at CoinCorner, we were actually having the same conversation on before the Strategic Reserve came out, and there was rumors about them including Cardano and XRP and all these things in there. And we had quite the debate on what it would be. And I was saying, like, if you take a step back and think, I know obviously politicians and et cetera, there can be corruption, there can be miseducation and things like that. But if you take a step back and think from a logical point of view, why would a country buy? They want something strategic that is going to be something that no other country can effectively control. And the point of it is exactly that. It's a a reserve that they can fall back onto should anything globally happen. And that can be, so sanctions are always the obvious one, where countries get sanctioned, but actually if they're holding XRP, for example, picking on XRP, why would the US buy XRP from a strategic point of view when Ripple, which controls XRP, is a US company, can effectively be controlled by the US government? Why would the US government buy that when no other country in the world outside of the US is going to bother touching that and going to bother with that? Because it wouldn't make sense for China to buy XRP, because if they buy that and then US and China fall out in any capacity, and the US just says to Ripple, right, seize that XRP that China own, take it back, pull it back, and Ripple will do so. It's literally no use to China. So they have to go to the most decentralized cryptocurrency there is, and the most sustainable, reliable, and that is Bitcoin at the end of the day. And that is where it will come back to. It doesn't matter which other coin you can throw out there. They all have some general central point of failure. I won't even get into the technical aspect of their failures, but they all have that central point of failure that Bitcoin doesn't. So it's just no common sense. There's no logic around why you would put anything but Bitcoin in that strategic reserve.
It was super fascinating for me to see how people like Brian Armstrong with Coinbase, who offers a lot of a lot of shitcoins. I mean, probably almost all of them. He was going out and arguing, it should be only Bitcoin actually in a strategic Bitcoin reserve. So he personally recommends the United States, please only do the Bitcoin one. But they're offering all the other things to make money, which I found was an interesting thing, because it's not his personal reputation when customers buy Cardano on his platform. But if, because of his recommendation, the United States president is buying Cardano in his strategic Bitcoin reserve, then all of a sudden he's like, only Bitcoin is secure. Focus please only on Bitcoin. That was an interesting thing to see, that also those casino owners know it's Bitcoin only.
Yeah. It speaks volumes. It really does. It was good to see that. I think the Winklevoss twins came out as well and said the same thing from Gemini perspective. There was a couple of others as well. I think, was it the Kraken CEO? I think had said similar. It wasn't Jesse, but it was the new CEO. There was quite a few that basically had said, yes, Bitcoin only makes sense and the rest don't, which is crazy considering they sell that to their customer base, all the others to the customer base. But when it comes to themselves and their country and as you say, their reputation, they don't want to put their reputation on the line for all these other coins. They would for Bitcoin, but not for anything else, which just goes to show that I'm hoping the public, annoyingly, the general public, that the retail audience that come in and eventually buy these altcoins, they're not paying attention necessarily to these sort of these news outlets, to the media, to social media, seeing what the likes of like Brian putting that tweet out there saying it should be Bitcoin only. That retail audience that goes to Coinbase and buys X, Y, and Z shitcoin is unfortunately may never see Brian's tweet about Bitcoin only. And it's a shame that, and it's maybe something we have to, as Bitcoiners, reiterate over the years to people, and educate people more on actually the casino operator actually tells you just buy Bitcoin, don't buy anything else. But that's their business model.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have two ways for you to deal with that. that? The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin way. The Bitcoin way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if you're in jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. It's super interesting because even in my audience, I know because I make community polls to figure out who's watching and to see get a little bit of a closer look. And I made the question of like, oh, do you own any altcoins? Like besides Bitcoin, do you own any coins besides that? And around 50% said yeah. Which is super interesting because I'm so focused on Bitcoin only, and I hammer like there's only Bitcoin on my channel.
Yeah, I think there's an angle of like if you want to go and buy altcoins, etc., fine by me, but know that you're gambling. So I think as people see Bitcoin as the investment side and then see the altcoins as just gambling to make more Bitcoin, for example, then perfectly fine, crack on, and you go and do that. And it doesn't bother me, and that's perfectly fine as long as you know that you are pretty much just gambling over there. It's not investment. There's no strategy around any of these other coins. It is pure gambling. I think the problem becomes when people don't really understand that and the retail market comes in and they're looking for the next Bitcoin, and that they don't understand that they're gambling. They think they're putting their money in and they're investing, and this is going to go to the same price as Bitcoin. And that's the basic logic falls out. It doesn't make sense to them, and they're seeing. I think I've even seen more recently people talking about XRP, and XRP is at like $2, whatever it is. But they're saying, that could go to $1,000, and it's like, you do realize that if that went to $1,000, the market cap of XRP would outweigh the whole of the world's financial systems right now. That sort of logic, they don't see that. They just see, oh, it's the next Bitcoin because the butcher down the road has told them this, so they're going to go and jump in it. And they don't realize they're gambling, and then they lose money. And that's the bit I don't like, and that's the bit we'd like to try and help educate on more. But that's a very, very difficult education piece.
Yeah, the unit bias is real. I get it all the time. Of like, oh, I want to get more Bitcoin, and then when I buy this one weird meme coin that might go to 50 cents, then I make like 1,000x, and I'm like, yeah, but if it goes to 50 cents, it's 2 times bigger than Bitcoin. Do you really think that's happening? So, like, right? They don't see how many of those coins exist and what is the coin price, and they look at the unit price and not at the market capitalization. And also they don't look at any fundamentals. They just, it's pure speculation. And this is actually a thing that I also get a lot, when I make those polls is like, oh, I just want to get more Bitcoin. I think it's a foolish strategy, but, if you want to do that, go ahead and do that. At least you'll see altcoins as what it actually is, like gambling, casino, speculation from that side. And I think it's interesting when we look to business adoption, because businesses get like, I've never really heard about businesses like, oh, like we buy that coin, or we buy a digital portfolio strategy where they're like the 50 biggest cryptocurrencies. businesses seem to get, it's actually Bitcoin only. Is that also what you're seeing, or do you see actually Bitcoin customers that also like, we also buy Ethereum?
It's a good question, because obviously we are just Bitcoin only for these customers, so we don't really see if they maybe some of them do go to then Binance, for example, and buy X, Y, and Z. It's not really a question we've typically asked in a survey sense, at least anyway. We've probably I've spoke to many over the years that have wanted to buy X, Y, and Z, and we say obviously we don't sell that, so it's up to them to go and find it elsewhere. A lot of them generally do come back and continue with the Bitcoin side. Whether they are continuing with the other altcoins in the background, I guess we wouldn't know. Maybe that's a good survey we should maybe send out to the businesses and see what the results are.
That's just pure belief, no data at all. But I have a general belief that businesses, especially if they are buying Bitcoin since longer than 1-2 years, are probably Bitcoin only. We've seen it. I mean, even like Elon Musk with Tesla, he's talking 90% when he's talking about cryptos. I mean, now he's not talking about crypto at all. But back in the days when he talked about it, he talked about Dogecoin all the time.
Yeah.
But he only bought Bitcoin. And he mentioned in several interviews that he has like 10x was, I think, the number, more Bitcoin value than Dogecoin. But he likes to troll on the internet, and he likes to do those things. So I think if it actually comes down to a business decision and a CFO is like, okay, like, are we actually investing in that coin that is basically another company? There's a whole nother thing going on with a commodity like Bitcoin. Is like, oh yeah, like we should diversify in that. I think it's the same conversation that is happening on national levels with USA, where it makes just way more sense to be Bitcoin only. And so I think the bigger the company, the more decision hierarchies and trees there are. It gets complicated that Bitcoin even gets in there. But it's then Bitcoin only, I think. So maybe there are some small companies that like 5 people that say like, like I'll also buy Ethereum because I hold it privately. But that's a whole different discussion. Serious and big businesses probably are Bitcoin only.
Yeah, I agree. I think they will all be Bitcoin only the longer they hold it. And I think you're right. As each cycle passes, people realize. And I think you'll always get the guys that will still maybe want to go and gamble and have a play around with the other ones. But that's at that point, hopefully they've learned and they understand that they're going and having a little gamble. But you are right. As businesses, they shouldn't be necessarily gambling with their treasury. So it would make no sense for the majority to do anything like that. So yeah, definitely. I think more widely Bitcoin only for businesses as opposed to retail.
What do you expect from business adoption in general? I think business adoption is highly underrated in the Bitcoin story till now. Yeah,
I think it's still, I guess, a slow and steady for the most part. I think we've seen maybe a bit of an uptick over the last 12 months since the ETFs started kicking in and there was more interest from businesses around Bitcoin. I think the Bitcoin, the balance sheet from MicroStrategy, that's that push and the more public companies that are putting Bitcoin on the balance sheet, that is definitely making more private companies pay attention. So we are seeing that adoption start to increase. It's not increasing at what we would have historically seen in a bull market for the retail. The amount of people that come in at a retail bull market peak is like far outweighs the B2B side. Which is to be expected, I guess. And maybe the ratio is level. That's maybe something that we also have not looked at that data. I have to look and see if that ratio is equivalent from retail and businesses as and when markets move. We know it is from the report we did in terms of the price of Bitcoin always brings in fluctuations of new businesses and new retail. So as the price goes up, more come in, as I think is just typical. And obviously as the price goes down as well, it starts to then die off in terms of new businesses, new retail coming in. So yeah, maybe I'll have a look at some of that data after and see if I can pull that into the next report maybe.
Do you see also from 11 years, you have gone through what 3 cycles, which is kind of amazing to see. Do you also have early indicators of buying behaviors of retail where you see bull markets slowing down or like bear markets trending towards a bull market?
Yes, yeah, I generally will put things public, whether it's on one of our podcasts or whether it's on Twitter, and I'll post these things. And I will sort of say you'll see people being very bullish and bullish sentiments. But retail, this last 12 months, retail have not been here. Even though it's been a bullish period, we haven't seen retail come back around yet. We've seen it in very, very small spikes. So when we look at our data and our charts, we can see sort of February, March 2024, we had a bit of a spike, and that was when the ETFs had kicked off. The price went back to an all-time high, and the ETF interest brought a little bit of retail, but it was not a scratch on the previous cycles. It was tiny. It was a bit of a blip, and then we kind of went back into bearish numbers for probably the next 6 or 7 months, and then it wasn't until October, November, when the presidential elections were coming up. And the November time and the Bitcoin price got moving to, again, another all-time high. We then had a little bit of a spike again in terms of retail coming in, new registrations and previous customers coming back. So we see that trend quite easily, I guess. And we track that almost on a daily basis, and we get to see that. But the bull market from a retail perspective has not begun. So we haven't seen that yet. I know people thinking, oh, the bull market's gone and we're back into a bear market already. Like, we haven't had a bull market. The price movement has been from institutional buy-in, from the ETFs, from companies putting Bitcoin on the balance sheet, from old Bitcoiners buying more. So I think it's definitely not been new retail come in just yet. I think you'll generally see that from maybe like Coinbase, or maybe shout about things. You've kind of seen that in like NFTs and things like that, where we see in the meme tokens, where every cycle you get this new thing, and NFTs was kind of last cycle. NFTs now are just flatlined and dead. And until a new retail audience comes in to see this, then that's not going to spike and not going to move. So you can kind of look at indicators around the industry to see what spikes and what sort of stage of the bull market we are in, and whether retail has come back or not. Similarly with the meme tokens and meme coins, Coinbase, etc., they're all listing as many meme coins as they can at the minute, because that's where they're getting their sort of volume, their trades from. But a lot of that is not necessarily new customers. It's older customers that are in crypto already, and they're all the ones that are gambling in there already. They're not new retail that have come in yet. And you will start to see, I think, another spike at some point of something, whether it's meme, whether it's NFT style, some other token-esque style thing, which will be a good indicator as retail coming in. But currently, yeah, all our indicators are saying no. I mean, the really obvious one is Google Trends, because that's public to everybody. And if you go to trends.google.com, and you can type in, buy Bitcoin, for example. It's always good not to put Bitcoin, because Bitcoin can be people searching for it, as in people that are already in the industry searching for that search term. If you do just buy Bitcoin, you can then look at that on a worldwide scale. You can look at that over like a 5-year period, or even an all-time period is probably a good one. There we go. Let's hope this proves me right. When you see that, if you do that to like worldwide, and do that to all time, 2004 to present, and you will see all of a sudden you've got the 2017, the big spike, even the 2021 cycle, there was diminishing returns in some respect, and it's either very diminishing returns at this recent spike. I think that's the November spike, and then slightly back is the March, the ETFs, which is what I was talking about. We saw the exact same in CoinCorner data, and that same spikes in new registrations. So our new registration flow follows kind of this chart, if that makes sense, quite closely. So
sorry, go ahead.
So yeah, I was saying that it does. People can very easily come and look at things like this and see, even though the price is increasing, and we're getting what would be considered an early bull market in my head from a price perspective, the retail audience coming back in has not happened yet. It's not new customers really at mass coming in. It's current customers, it's businesses, it's larger institutional sort of buying at the minute, which is making price movements.
That's crazy. So I have always made that mistake. I just put Bitcoin in, like I looked at Google Trends, but just with Bitcoin. But actually, you're right. With new retail, you buy Bitcoin is a way better search term, and the difference, like we are not even 10%, like we're 9% where we are currently with 2017. I mean, 2017 was crazy. It was also the year where I heard first about Bitcoin. I was 18, 19 years old back there, and I got invited to 2 different multi-level marketing schemes on top of Bitcoin in that 1 year alone. Was seemingly a prime candidate for that. Didn't go in any one of those. And now 2021 was also a bigger discussion point. I can definitely say that also, but definitely not as big as 2017. And actually, it completely mirrors what I've seen with the 100K, because I personally thought that we hit the 100K like November around that time, and this spike goes up like here where we are like maybe at 50% of what we have from 2017. But that just didn't happen at all. Like nobody cared about 100K Bitcoin.
No, to be honest, I was wrong completely on that. I expected when we hit 100K, I expected kind of retail to pay attention again and start going back in. And we had them tiny spikes, but we didn't have the significant retail. Especially, we had the initial burst for like a week or two when it hit 100K, but it was only a quick burst, which is why sometimes if you look at Google Trends and they have a dotted line, you will see, which is the up to date or the one that's not quite finalized yet. So they're sort of anticipating and expecting that this search term ratio will be at a certain level. And you will have seen sometimes on Google Trends, I think people tweeted some pictures out where when we was hitting 100K, that dotted line was almost higher than like the 2017 line. But that was because there was a lot of searches in a very short period of time, just within like that week of the presidential campaign and the 100K price. There's a lot of searches very, very quickly, but then it very quickly dies off. And then over a longer period of time, it averages out, and that's why it drops back down and the dotted line disappears eventually and it comes into a solid line, which is the actual data. So yeah, I was wrong with expecting 100K being that price point. That was the mental barrier for the general public and the retail. And I expected them to start moving in, but they haven't really, only in very short bursts. I guess what that mental barrier is now for the general public, we have to maybe wait and see. It could be just general markets as well. And the 2017 was kind of, in some respects, I don't want to say an anomaly, but 2017 was brand new. People were still hearing about it for the first time. And it was that was an absolutely crazy period. And that spike is December by itself. It was just 2017, December was crazy. We had a lot of exchanges were turning registrations off. We couldn't handle it. I spent months basically systems and things like that, the websites, we weren't expecting that level of traffic and that level of customers. And I spent months personally, because I'm a developer by trade, so I originally built the system, and the system was fine in some respects, but then because there was so many people coming on, and we link into various APIs all around the world and different companies. There was levels where it was just falling over and people we just couldn't do things. I was having to manually process all sorts of things. And I spent months just firefighting, because that was all I could do to keep the things ticking over and to keep the system running. I had to just firefight for months. But that was a crazy time. 2021, I think it was COVID. There was obviously the money printer, and that was kind of from a whole global perspective, the money printer kicked in all different capacities, but that kicked in, and the COVID side of things really triggered things. People were at home, not at work. That kind of, I think, was probably a big driver in the retail market coming to Bitcoin, because they're, one, sat at home, nothing to do. They're some of them were getting paid, depending on countries you were in, etc. People, for example, in the UK were being paid to not go to work and still be paid for a certain period of time. I know the US did the stimulus checks. There was money flowing into the economy because they had to. And I think that drove retail audience to have had spare cash at that point to then potentially look into, also sat at home bored with spare cash. What do they do? They're going to go and look to things like this, like from an investment point, or crypto from a gambling point. So that kind of drove, I think, the retail at that point. This time, again, the mental barrier of $100,000 has passed, and maybe that wasn't the trigger for retail. Maybe it will be the US buying it in their Bitcoin strategic reserve. They have a strategic reserve now, or they're introducing one, but they haven't bought any Bitcoin yet. Maybe at the point when they buy Bitcoin for the first time and actually announce that will start to trigger, obviously, other countries and other people will start to see that in the media, in the news, and then that maybe is the barrier, the mental barrier for the retail audience to start to pay attention again. That would be my best guess, but I was wrong last time, so anyone's guess on this one.
I was expected, and I kind of was. The first time I was disappointed was we have those bigger family meetings with around Christmas and Easter and stuff like that, where I see a lot of people that I haven't seen for a year, and I was just on a table and I was like, nobody cares about Bitcoin here. Like we are 100K. It's so exciting with the election and possible strategic Bitcoin reserve. And I was like, yeah, like there's this one aunt that is asking some question of like, oh, like, what is this? Is this Bitcoin thing still alive? I heard about it in the news, but it's generally like, and they don't care. And then when I saw the continuation of that, I was like, yeah. Actually, it's not just my broader family, where I have my core family that is all in Bitcoin, but my wider family is not in there. But it's also just the general population that seemingly doesn't care about that at all. Do you think we will ever reach a hype point like 2017 again, or is it just a different beast of Bitcoin now, and we have more of a steady and slower growth?
It's a good question. I think in some respects, it's probably a slow and steady growth, in my belief, which it doesn't mean necessarily the price will be the slow and steady growth, but I think from the wider adoption of people buying Bitcoin is potentially a slow and steady growth, which I know may go in the complete opposite direction in some way to what people see as the bell curve for the adoption cycles, and you see in the early adopters, the innovators, early adopters, etc., into the laggards at the end. I kind of seeing it a little bit like that. I think at the minute, I think for a 2017 influx, I think you would have to see something more substantial around the world happening, from an economic perspective and the economy, and anything can happen, as we've seen, these past 10 or 15 years, going back to even like the 2008 financial crisis onwards. There's been some unprecedented history been made with obviously the banking crisis, the COVID periods. There's been a lot where we obviously can't foresee that sort of thing happening, and COVID was never something that people would have foreseen and expected at the level it went to. So anything like that could happen and could trigger a 2017 style again. And it's whether that's gold is always, if we think in the sense, I suppose gold is a slightly different investor as well, but gold can be artificially made now and manufactured and things. It costs more than the price of gold to do that right now, but as technology improves, then that can then be artificially made. Same with diamonds, is it? I believe diamonds are artificially made diamonds now are cheaper to make than real diamonds. And as technology changes, that will become cheaper and cheaper and cheaper, similar with gold and other investment sort of assets, commodities. Whereas Bitcoin, you can't do that. So maybe if there's some major trigger point at that point, you will start to see an influx of people leaving the likes of gold and any other assets that historically would have been, whether it's a housing crash, real estate, housing crash. Maybe there's things like that. I think it would have to be maybe a 2008 crisis or a COVID level crisis, maybe, to really trigger it. And not saying we're not going to see that in the short to medium term. We may, but currently, as we foresee it, probably not anything to trigger a 2017 level influx. I don't believe.
Yeah, I talked with some guests already around that, and I strongly believe that even if we hit higher price points like $500,000 or $1 million, most people, like let's say 80% of people, will still don't have Bitcoin, or will still don't care about Bitcoin. I think the major drive of Bitcoin isn't retail. It's unfortunately big institutions, it's companies, it's maybe even nation states, because Bitcoin is such a strategically important asset. And retail basically had now 14 years before the big institutions, and now the asset kind of seems to change a little bit. And maybe for people to understand the scale of that, it's super interesting to look at that. When we compare now 2017 with a price chart of where we were in December in the top, and now of the crash down to 84K. We are 434% higher than that level. And then again, to that interest chart, we were here at 100% and here at like 9. So the interest was in 2017 more than 10x higher, but the price was just is now 430% higher than it was 2017. So which tells me a few things, and I'm curious what you think on that. But a few things, like the people that buy more Bitcoin. They're going deeper. They're having more conviction. They're not only, like I buy Bitcoin with like 1%, but I buy Bitcoin with like 10, 20, 30, maybe like over 50% of my wealth. But then also the pockets that come in have deeper pockets, and just are bigger buyers. So we don't need the hype anymore in Bitcoin, if that makes sense.
Yeah, exactly that. So again, as I mentioned, the research report we're going to put out on the retail audience in the coming weeks, that effectively shows similar to what you're saying there with the conviction. So back in 2017, the amount of people interested in Bitcoin were there. There was lots of them, but they weren't buying $100,000 like chunks of Bitcoin. They were buying $100 worth. They were buying small amounts because it was brand new. They just heard about it. They didn't want to miss out. It was a bit of a FOMO mentality where they were jumping in, but they were only putting money in that was like spare money, effectively, that they could theoretically at that time as well. They would have seen it as maybe a bit more gambling and higher risk. So they were only putting smaller amounts in. So even though if we look at that from our customer perspective in CoinCorner, I'm trying to think back in my head now to charts and how that looks. But we would have in 2017, the biggest, December 2017, for example, probably the biggest retail signups we saw on the platform in a single month. Yet the volume in that month is tiny in comparison to what we do today. We'll do most of the time, could be 20 times, maybe now, what we did in volume in that month as the most popular one. So we had the most people ever coming in December 2017, but every month at the minute for the last 2 years, for example, we've probably done more actual volume in buys over that, say, 2-year period on average every single month than we did in the 2017 December. So that shows that even though the amount of customers were there, the volume they were buying was so much tinier than it is today. So the conviction of them customers, as they've bought maybe $100 back then, now they're more comfortable to buy $1,000 every month now. And it kind of increases in time. And as conviction increases, a percentage of people's portfolio increases. We've seen exactly that with BlackRock, with Larry Fink. And he was, I think originally when they first were going to do the ETFs, did they say between 1% to 2% should be allocated to Bitcoin as your portfolio? And I think that crept up eventually to 6 to 7%, I think. And there was a ridiculous one at one point where they said, I think something like 60% of your portfolio should be in Bitcoin. And you can see how I can't remember what that number was exactly, so people don't quote me on that if anyone's listening. But they were increasing as time goes by and as confidence goes by. It's the Lindy effect. With the longer something survives, the more confidence and the longer it will survive going forwards. So I think that's definitely happened with Bitcoin, and people's understanding and their confidence and conviction in it increases as time passes and the longer they are in Bitcoin. So you will definitely see, you are right, the older customers are buying more now than they were in 2017.
That makes a lot of sense, and it's super interesting. We do see the feeling that I have kind of confirmed with data that you actually have.
Yeah.
From that, because I can only go from the feeling that I have from all the guests that come on and from the replies and the community that I get. But it seems to be quite accurate in terms of actual data. That's super cool to see.
Yeah, it's good. I was. This is kind of why we thought towards the end of last year we was kind of thinking about things in terms of the data, and we found ourselves, I guess, in quite a unique position around the world where we've got 10 years of history and 10 years of data, and we are Bitcoin only for that data as well. So we can heavily show, I guess, the growth, the conviction, the commitment from the retail audience, because the majority of our customer base is retail audience. Or investors / retail, as opposed to B2B side. But we can actually show that to people. So we realize that, and that's why we're starting to release these reports, and we've been digging into the data more to help show this at a nice, friendly scale. And you will see that's the exact kind of bit of data I was looking for from these reports, is what you're touching on there. I wanted to see the same customers, for example, from 2017, 18, 19, etc. I wanted to see how much their average buy was over the years, and did the average buy increase over the years? So as you've come into 2024, as that average buy crept up and up and up and up over time. And I haven't seen the comparable yet, side by side yet, but I'm pretty confident that is the case, and that you will have seen back in the 2018 period, the average buy, I think, was like £200 or something like that. But then over coming up to 2024, we're then starting to see more like £350, £400 average buys. And hopefully we'll chart that as well for the public, and we'll chart that against over the years, over the last sort of 6 or 7 years, and you'll be able to then see the average hopefully increasing on the chart, and it will back up exactly what you're thinking.
Really, really cool. One more topic I want to get into with you is the game theory. I think you and CoinCorner are based in the UK, if I got that right?
The Isle of Man specifically, but yeah.
Yeah. So how do you look at the game theory between what's going on right now in America, and they're talking about strategic Bitcoin reserve, they're already building that, they're planning to even extend that, and then we have Europe where Germany is selling, the UK is also not doing a lot with Bitcoin publicly, and there's this EU and launching and possibly a CBDC in, I think, October or something like that, what I heard, so the digital euro. How do you look at Europe versus America with game theory and Bitcoin adoption, and maybe also from political level versus like the actual grassroots level?
Yeah, I think unfortunately Europe is falling way behind, and game theory has not quite worked for Europe, with the US going on the strategic reserve side. They've almost screwed up the game theory process, thrown that out the window, and they're trying to run the complete opposite direction of, I think, squeezing it too much, and effectively Europe are doing what the Biden administration had done in the US, and that is at the negative to the industry, and to the general public and the retail audience and everybody out there in Europe. UK being included in that Europe sense as well, I guess. Obviously different regulator, but there's still the issues around it. Don't get me wrong, the UK hold a lot of Bitcoin at the minute due to seized assets. What they're going to do with that is anyone's guess. I know there's a lot of people trying to push them to do similar to the US. At least now the US have done it. There will be a different kind of pressure on the UK to look at that, to say, maybe we shouldn't sell this. Maybe we should put this into a strategic reserve. Whereas if the US hadn't have done that, then the UK wouldn't have even thought twice about it. They'd just be selling it as soon as they can, and off they go. So I think the US strategic reserve has definitely created that trigger point and the beginning, shall we say, of some sort of game theory where other countries have to actually ask the question, should we sell this or should we hold it? And they'll eventually then have to ask the question, should we buy more of it? Should we mine more of it? Obviously, we've got El Salvador, they've been buying, mining, etc. The US now holding seized, but potentially looking to buy. We've got Bhutan, who've been mining Bitcoin for a while now and have gained quite a portfolio there. We've got the UAE with the Abu Dhabi Wealth Fund had been buying Bitcoin recently as well in the billions. There's a variety now, I think, where we're starting to see countries pay attention and countries actually actively doing something about it. I think what you will see, however, the US is actually moving quicker, I think, than I expected. And moving quicker than maybe what a lot of other people expected too. But we have to also appreciate that governments around the world, no matter the size, they are generally all still slow and steady to introduce changes, introduce new things. Generally, it's public money that they're doing these things with, so they have to be very careful in what they're doing and to appease their residents, their citizens. And they need to make sure that they are sensible in some approach. So this is why another reason of why you would never go and buy Cardano and X, Y, and Z meme coin and everything else. So you would look to the sensible one, which is Bitcoin. But it won't happen overnight, the game theory side of things, and that will happen in the long term, and it will take years for that to really kick in and play. Some of the bigger ones, like your Russia, your China, your US, where they may be able to respond and react quicker because they are trying to compete head-to-head with the US, for example, with China and Russia. They're going to be more head-to-head with the US, as opposed to other countries around the world that are not necessarily trying to compete with the US. They know they've got to play catch-up in some way, but they still have to go through their same processes, their regulatory hurdles. The process is effectively for that government to bring whatever law it is they require in, or whatever process they need to bring in to actually buy Bitcoin. Here in the Isle of Man, I've been through this. Funnily enough, the wheels are in motion again for the Isle of Man. But we've had, that's very recent, just this week, we've just got the wheels in motion again moving for the Isle of Man to do something. But I've had that same conversation with the Treasury Department in the Isle of Man for every cycle. I went back this week looking at my old emails and trying to dig out the dates of where we were for the purpose of this week. I had the conversations in, I think it was 2018, which was after the 2017 cycle, obviously, because the interest spiked. That was on them accepting Bitcoin for tax payments, etc. I'm going through that. We then had the conversation with the Isle of Man's Treasury Department and that went to their board for the Treasury to approve buying Bitcoin in 2021. So in 2021, they would have been the first country in the world to have bought Bitcoin, but the decision was a bit of a weird one. It wasn't a no, which was a positive, but it wasn't a yes, we're going to go and do it straight away. It's kind of up to the financial advisory firms that effectively look after the government's money. And unfortunately, the criteria Bitcoin doesn't really fit in any of their criteria that are allowed to invest in. So they couldn't really do it. It was a bit of a get out for them in some respects, unfortunately. Now we're starting the wheels in motion again, now off the back of the US Strategic Reserve. So now they are now open again. It's 2025. The cycle, it feels like every cycle, we basically go and have another conversation with them, and we're getting closer and closer each time. And the US Strategic Reserve has probably allowed us to go a little bit closer this time for the Isle of Man. Now, the Isle of Man are a very small jurisdiction, a very small country, but it's good to, obviously, for people to know and be aware as well that even the smaller players like the likes of the Isle of Man, they are paying attention. They are looking to the US, seeing the US doing these things and thinking, okay, we need to do something as well. So that is happening, wheels in motion. We'll see where we get to.
It's probably a similar thing of when you see a huge publicly traded company, this inspires a lot of smaller private companies. And if you see America slowly moving towards that, all of a sudden there's tens of other smaller countries that all of a sudden have those conversations and say like, hey, like, why aren't we doing that? If America is moving that, we are a smaller country, maybe we should move faster than the big fish, because we have to do something. So in that regard, even as you said, it surprised me also how quick actually America moved there. We have one question that I asked each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
That's a good question. Very good question. I guess one of the things that unfortunately will tie into Bitcoin a little bit. So I'm maybe more from a business perspective. Bootstrapping a business is effectively what we've done over the years. We haven't gone to big venture capital money. So bootstrapping a business over a 10-year period is probably something I couldn't give you too many tips and hints and things to learn from on the spot here, but maybe to observe what we did at CoinCorner and how we did that. There's many companies over the years. You've got obviously your Coinbase and your Binance, etc. The Coinbase, you've seen the amount of investment they've taken from venture capital companies over the years, and they've thrown money don't say it thrown money at the problem as such, but they've thrown money to grow, grown quickly, and that's one way of growing. But you see in the venture capital world, I think they usually have their stats where, every 10 investments they make, 1 is successful, 2 or 3 might be like mediocre but not really do anything, and the rest of them fail, and they all fail very quickly and go quickly. And we've seen that come and go over the years. We've seen many businesses come and go very, very quickly. And what we did instead was kind of, rather than try and throw money at the problem and trying to create a solution in some respects, we took a step back and said, okay, we need to make a real business model here. So even at the times when you saw, it was mostly in the bear markets where a lot of these bigger companies had lots of venture capital money, but they weren't getting customers. So they had to try and improve their numbers to then raise their next round of funding. And they were doing this by spending the money they had to get as much as they could in, but they were doing things like offering 0% trading fees. So you didn't actually have to pay or anything. And we didn't play them games. We said, okay, no, we don't have that funding. We're not going to go and take the venture capital money. We're going to try and bootstrap and grow ourselves. So we have the control within the company of the direction that we want to go in. Having said that, we turned down venture capital money along the way over the years as well, because we did sort of flirt with the idea of it, and we went and pitched at many venture capital companies throughout the years, though they always wanted blockchain or the tokens or anything else around the hype at the time. And it wasn't the same vision and direction that we were wanting to go. So we ended up saying no to that all the way through in the end. But one of the things we focused on creating a real business model with real fees in, with structures in. And you will maybe have seen over the years, people would be, saying, CoinCorner is more expensive than these other places, etc. And it would be, and sometimes we were more expensive. And that was just the case because we'd created a real business model that was sustainable and could survive over the long term, and looking at the long play, as opposed to looking at the short term benefits, where you'll still see in bear markets. I think actually even Binance at the minute, they've just reduced their fees to 0% for new customers, I think, or something like that. So that's a prime example there of the crypto retail is not here, and they're trying to gain more customers to increase their numbers and sort of bring people in. And by doing that, they've just raised 2.5 billion, something, or 2 billion from the Abu Dhabi one of the wealth funds again. And they've got the cash, and they don't need the fees, so they've reduced the fees, and that's not a long-term sustainable business model, having 0% fees. So definitely when starting a business, making sure that you actually create a business model that is sustainable in the long term, and don't always look and focus at what the competitors are doing. Keep an eye on the competitors and always analyze your competitors, but don't follow what they're doing, because it doesn't mean to say they're doing it right and correct. They're doing what they think is correct for them at that particular time, which may turn out to not be correct as well. And it doesn't mean to say they know better than you guys do in your own business. So when running the business, always make sure you're the one that knows your business the best, and hopefully knows the industry well, and make sure you don't give in to peer pressure of competitors doing things that they do from a marketing or whatever reasoning they have behind the scenes of why they're doing them things. Make sure you stick to your business model and to your direction.
I think that's really cool, and almost a second episode that we could start here, but let's keep that for the second round, to not make it even longer. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. It's a question that actually never came up, but it's a very interesting one. If you could make the best case against Bitcoin, what would it be?
Good question. On the spot, it's a good question. The obvious one, I guess, is honestly, it's not a good case, I would say, but it's always the obvious one that a lot of people go to in terms of Satoshi and Satoshi's coins and the amount of coins he holds. That it's the thing of, it's not just because he owns 1 million Bitcoin, or we believe he owns 1 million Bitcoin. And similarly with MicroStrategy, and they own coming up to 500,000 Bitcoin, I believe now. People are thinking, okay, that's centralized in the respect of somebody owns loads of these Bitcoin. It doesn't mean they can control Bitcoin or they can do anything to the network, to the mining, to the hash rate, etc., or to the nodes around the world. They just hold a lot of this currency. But however, that will and can have an impact, and MicroStrategy is one that people will and already are paying attention to. In the short to medium term, if anything goes wrong with MicroStrategy and they have to liquidate and sell their Bitcoins, they have a lot of Bitcoin that would have to hit the market, which would cause an impact to the price, which causes, it doesn't break Bitcoin and the fundamentals of what Bitcoin is and how that works at all. So it's not an issue from a survival of Bitcoin. However, it is an issue in terms of the price that may drop, and potentially at a fast pace and a large pace, for example. And that price drop hits the public and the retail and the public perception of Bitcoin, and Bitcoin's death again. And we've seen this every single cycle. There's always some trigger point that creates the bear market or kicks the bear market off. And we had Celsius and FTX, etc. last one, and I can't remember the previous ones before that. But there's the trigger point, and that always has this public perception, which is always negative, and that creates a problem for companies like us, where we then have to go back out and educate and re-educate. It doesn't change the fundamentals, so it's not an issue on a fundamental perspective, but it is an issue on the public perception and the confidence in Bitcoin from the wider audience. So I do think that's a sensible argument in some respects.
The best one I've heard is with mining centralization and the templates and how the pools are kind of big and controlled, but even that is not good, and there are a lot of solutions in the works, and it's still the decentralized. So like making a case against Bitcoin is hard, difficult.
Ocean mining is a perfect example. Ocean mining doing with the templates, and you can use your. So there are solutions coming in, but technology is new. Technology takes time to grow and to be integrated, and that will take time. But there's a solution in place and starting to roll out. So. I think it's a difficult one to make a good case against Bitcoin now.
Absolutely, and that's why we make the case for Bitcoin. Thank you so much, Danny, for being on the show. Before I let you go, where can people find you, ask you questions, and reach out to you?
Thank you, Robin. Appreciate the time on the show as well. Thank you for having me on. You can get me on Twitter, CoinCorner Danny. It's probably the best place. That's where I'll generally always be paying attention. So always there.
Perfect. Thank you so much for taking the time. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.
Thank you.